The head and shoulders pattern that breaks to the downside usually first is in some form of upside movement, and there's a break of some sort. Boom. This break is potentially the first part of a head and shoulders pattern. It doesn't always break, but in a lot of cases it does. And what do I mean by the first break? Well, it's the first break of the upward trend. So it's usually a larger decline than the previous declines, but not always. But it usually is. It's the first warning shot. Not always. Usually it is. And this would potentially be the left shoulder. The next move often comes up toward the high, and in some cases even makes a new high and then starts to drop back. This is potentially the head part of the head and shoulders. The first drop here in my diagram is actually a warning that selling is becoming more aggressive, that something is different, something has shifted, something has changed because the drop was more severe than the previous drops in the uptrend. After this troublesome drop or warning shot, it brings in all the players, the late players that did not participate in the uptrend before the left shoulder. They were on the sidelines, and this extra drop they see as a discounted opportunity to rush in. They were left out of the initial move here, and they were waiting for a discounted price of some sort to jump on board. And it is this effect that often sends the next move higher. But in this case, usually, guys, these are the last of the Mohicans. There are not that many more buyers left for this specific item. The uptrend's been going on for a while. The move up are starting. The people who enjoyed from early entries the move up are starting to take profits. How do we know that? Because of this more substantial pullback. We know that the last of the Mohicans, as it were, are finally coming in, is your last buyers coming in to produce that new high. That new high is potentially suspect. Doesn't have to be. But if that new high doesn't do this, create a higher low and take out the high, if it doesn't do that and instead it drops all the way back toward this low, it's very high odds will be a lower high. That lower high, this doesn't have to be equal, just relatively equal oftentimes. Sometimes it's slanted like that. It doesn't have to be equal. But this deeper than normal drop along, this is now your second one, but in this classic example, but this deeper than normal drop along with this lower high, the right shoulder, that lower high tells you that the head and shoulders is in play, and the odds are very high that you break this. You break what's called the neckline. It's called the neckline. And this pattern is so prevalent that it is one of the most popular ways markets turn. I want you to understand the psychology of what's happening. There's a million people out there that know this pattern, but most of them don't know what creates the pattern. And that's your deeper understanding of that will make you a better player of this. I want you to understand the psychology that's going on where this drop is your first warning shot. Not always, but some of the times it's your first warning shot because that's the first more severe drop. That's the first severe drop that tells you something is up. Selling has started to pick up. That first drop brings in the late buyers that missed everything. This is the last group to jump in. And once that last group jumps in, it pushes the market to a a new high. That new high is suspect, especially if this drop was a warning drop. We still don't know at this point whether it's going to be a head market. The odds go up really high is if the second drop is deep as well. Now, what do I mean by a deep drop? Remember our percentages, right? A deep drop is whenever you severely break the halfway point of a move up, split it in half, and if you severely drop below the halfway point, that's the deep drop I'm talking about. And so once you get the secondary deep drop, the odds are really high that you've got a head and shoulders on your hands. That new high is a fake out new high. It's a weak new high because it's created by the last late group of buyers, and there's not many more buyers left. And the next rally is used by everyone to dump whatever they have, causing the break. Now, the next one who hasn't dumped already to dump, this is what makes the break almost imminent of that trend line. That trend line often becomes resistance for quite a while. It takes a while for this resistance to basically get broken through, and it usually gets broken through a little further out if it comes back. On the reverse side, you have, a downward move, and this upward move here is oftentimes a little different from the other upward moves. It's just powerful. It changes something. It breaks the back of the downtrend, really. This next drop can go to a new low. This is where you start to think, here's my left shoulder, here's my potential head, move back up as well. Remember what I told you what deep is. If it greatly supersedes the halfway mark of your last decline, that's considered deep. Boom. Now you've got your head part, and the odds of the next drop being shallow is high. Right shoulder. Now let's get the neckline in there. Boom. Same thing in reverse. Same thing in reverse. And the psychology is relatively the same. This move up, this bigger than normal move up, the sharper than normal move up is your warning shot that the short sellers are starting to cover and that new buyers are starting to nibble on the discounted price, the lower price. They're starting to come in. They weren't coming in here as much. They weren't coming in there as much. But now they're starting to come in. Those who missed out on the short side over here, there's this last group that piles in on the short. It's so late in the downtrend. If this move up is also strong, just like the last one, the odds of you having a head and shoulders and the next shoulder being shallow is now increased, and boom, here's your right shoulder. And once the neckline goes, the market's turn is complete for a while. What I want to do is I want to show you, I want to use the daily chart here of BTC. I know Mansi just mentioned that, and he's right with this. If we eliminate the noise, here is really the left shoulder turned out to be. We dropped one last time to sort of create this head section here. We came all the way back up. Remember I told you it doesn't have to be equal, but now the odds are very high that you've got this inverse head and shoulders bottom, and the next drop should be shallower, and boom, you break the neckline. Left shoulder, head, right shoulder. And that is how Bitcoin sort of made its bottom late last year into the beginning of this year. And the same psychological dynamics are at play here. This drop, this last drop here, was the last of the Mohicans selling. There weren't many sellers after that one. Weren't many sellers left. And if you recall, remember, Bitcoin came from 69,000 to 16. These are late sellers. These are late panickers. Most of the people who were going to sell have already sold. This is your last of the Mohicans getting out. Okay, now if we go to more recent times here, we sort of see the head and shoulders pattern playing out on the opposite side. So we've got this. Now in this case, guys, we don't get the sharper than normal drop. That's why I was telling you, in some cases you don't get that. And here's your higher high. Now here's the drop all the way back. That's the one right there that really gives you the sign that we're potentially, the odds are high for a head and shoulders topping pattern for a bit here, and that the next rally is going to be shallow. Neckline is broken, and like I told you, that neckline is major resistance. It's usually not easily broken until you get more time away from it and under it. These patterns can play out on smaller time frames as well. Now Ryan's asking, Oliver, is this similar to Market Law 4? Yes, it's very similar to Market Law 4. Very similar. It's just a bit more involved. So Market Law 4s can morph into head and shoulders overall patterns. What you can get is a variation of the head and shoulders pattern without the head, and that's what we've commonly referred to as Market Law 4. So you can get this scenario where you drop here, this potentially is the left shoulder. You don't make a new high, really a significant new high, and you drop back, and this is your lower. So you get this double top, which is Market Law 4, instead of the head, but it's still a variation of the head and shoulders because what follows is a lower top. And so your Market Law 4 scenario is a variant of the head and shoulders pattern. It's the head and shoulders pattern without the head. That's all the Market Law 4 is, the head and shoulders pattern without the head. Think about this, guys. So sometimes you can make the new high and sometimes you don't. Left shoulder, head, right shoulder. But they both mean the same. Now, when you take these two variants, these two versions, you have most of the market's tops and bottoms covered. I would say something like 80+% of how markets top. When I say markets, I'm saying all stocks, all markets. These two cover more than 80% of how markets turn. And that is why it's so important for you to understand the Market Law 4 and the head and shoulders pattern so intimately, so thoroughly. So the way you play here, from a macro perspective, this is your best entry. If you get in a nice event there, which is really the start of your move down from the lower high, this is a good one too, but you need something very powerful. You need something very powerful off this new high to make you think that new high is false. But typically, this is your best entry, the lower high entry into the downtrend, because you still have a certain degree of doubt. This diminishes the doubt. If something violent, something powerful kicks off the failure of that new high, that has very good odds as well. Barring this, this is your best play. All right, same on the downside. Your best play is this right there. Something nice that turns the market back up, something powerful. That's your best. You can get it off the low as well, but it's got to be really stark, really powerful to break the back of that new low. But barring that, the higher low is the best time to get it. And oftentimes that higher low is happening with a 20 MA halt.